Real money strategies, real Canadian numbers. Retire Rich Canada. You have $1,000. Maybe it's your tax refund. Maybe it's money you've been sitting on for months, not knowing what to do with it. Maybe you just made a promise to yourself that this year you're actually going to start. Whatever the reason, the question is the same. What do you actually do with it? Not in theory. Not in some American YouTube video that talks about stocks you can't even buy in Canada. Here, now, with 1,000 Canadian dollars in your pocket. In this video, I'm going to walk you through exactly how I would split and invest that $1,000 in Canada in 2026, using real platforms, real funds, and a real strategy built for the Canadian market. No guesswork, no jargon, just a clear, actionable plan you can copy in a single afternoon. Let's get into it. Now, where does the money actually live? This is one of the most important decisions most Canadians get completely wrong. The answer, for almost everyone watching this, is a TFSA, a tax-free savings account, held inside a self-directed brokerage. Not a savings account at your bank. Not a GIC. A self-directed TFSA, where you control what you invest in. Why the TFSA first? Because every dollar of growth inside a TFSA is completely tax-free. If your $1,000 grows to $5,000 over 10 years, you owe the government nothing, not a single cent. Compare that to a regular account where you'd pay capital gains tax on every dollar of profit. For the platform, I'd use either Wealthsimple or Questrade. Both are Canadian, both are regulated, and both allow you to invest inside a TFSA with zero commission on ETF purchases. If you're brand new, Wealthsimple is slightly easier to navigate. If you want a bit more control, Questrade is excellent. Open the account today. It takes about 15 minutes and your SIN number. The sooner the account is open, the sooner your money starts working. All right, here is exactly how I would split $1,000 as a Canadian investor in 2026. I'm going to give you a simple 4-part allocation, and then explain the thinking behind each one. The core, $600 into XEQT. This is the simplest, most powerful move available to a Canadian investor right now. XEQT is a single ETF that gives you exposure to over 9,000 companies across Canada, the United States, Europe, and emerging markets, all in one fund, for a management fee of just 0.20% per year. You are buying a small piece of almost every major company on Earth. When the global economy grows, you grow with it. This is the foundation of your portfolio. Set it, add to it monthly, and leave it alone for decades. The income layer, $200 into VDY. VDY holds Canada's highest dividend-paying stocks. The big banks, energy companies, and telecoms that have been paying and growing dividends for decades. These companies pay you a percentage of their profits as cash directly into your TFSA every single quarter. You're not just waiting for the stock price to rise. You're being paid to hold. As a beginner investor, seeing those dividend deposits hit your account is one of the most motivating things in personal finance. It makes the whole thing feel real. The real estate play, $100 into ZRE. Most Canadians think real estate investing requires a down payment of hundreds of thousands of dollars. ZRE lets you own a piece of Canadian real estate, shopping centers, office buildings, apartment complexes, for the price of a single share. REITs are legally required to distribute 90% of their taxable income to shareholders. That means more income, more often. It also diversifies you away from pure stock market exposure, which matters when markets get volatile. The buffer, $100 in EQ Bank TFSA savings. This is your psychological safety valve. The $100 sitting in a high-interest savings account inside your TFSA earns you 4% interest, significantly better than any big bank, while remaining completely accessible if you need it. It also keeps you from panic selling your investments if something unexpected comes up. Having a small cash buffer inside your portfolio is not weakness, it is strategy. Here is the part most investing videos skip, and it's the part that actually determines whether you succeed or fail. The investments I just described are not exciting. There is no hot stock tip, no crypto play, no secret the banks don't want you to know. And that is precisely the point. The number one reason Canadian investors lose money is not bad stock picks. It is behavior. It is panic selling in a downturn. It is chasing whatever went up last year. It is checking your portfolio every day and making emotional decisions based on headlines. The market will drop. Guaranteed. At some point after you invest this $1,000, your portfolio will be worth $850, maybe $700. And in that moment, every instinct in your body will tell you to sell, to stop the bleeding, to get out before it gets worse. That moment is when most Canadians make the most expensive mistake of their financial lives. Because here is what the data shows, without exception: markets recover. Every single correction in Canadian and global market history has been followed by a new high. Every one. The investors who held through the 2008 financial crisis, through COVID in 2020, through every crash and correction, they are the ones who came out the other side wealthier than before. Your job is not to pick the right stock. Your job is to buy quality, diversified assets, like the ones I just described, and then do almost nothing. Check your portfolio once a month. Add more money when you can, and resist the noise. Time in the market beats timing the market. Every single time. I want to make this as easy as possible. Here is exactly what to do this weekend, step by step. Step 1. Go to wealthsimple.com or questrade.com. Open a TFSA account. You need your SIN number, a piece of ID, and about 15 minutes. Both platforms are free to sign up and regulated by IIROC, Canada's investment industry regulator. Step 2. Transfer $1,000 from your bank account into the new TFSA. This can take 1 to 3 business days to clear. Do it now so you're not waiting. Step 3. Once the funds are available, search for the ticker symbols XEQT, VDY, and ZRE. All three trade on the Toronto Stock Exchange. Buy the amounts I outlined: $600, $200, and $100 respectively. Step 4. Set up a recurring monthly transfer, even $50, even $25, into your TFSA. Automating your investment is the single most powerful thing you can do after making your first purchase. Consistency compounds. Small amounts invested monthly over years become something extraordinary. Step 5. Put your portfolio on a calendar reminder. Check it once a month. That's it. Do not watch it daily. Do not react to news headlines. Just let it grow. $1,000 is not a fortune, but it is a beginning. And beginnings, invested consistently, left to compound and protected from panic, have a way of becoming fortunes over time. The Canadians who retire with dignity are not the ones who found a hot stock or got lucky on crypto. They are the ones who started with whatever they had and never stopped. You now have a plan. The only question left is whether you act on it. This week, not next month. This week. If this gave you a clear path forward, subscribe. We break down real Canadian financial strategy every single week in plain language. Hit the notification bell so you catch every video. And if you know someone who's been sitting on money and doesn't know what to do with it, send them this video right now. It might be the most useful thing they watch all year. Thank you for watching. See you next week. Retire Rich Family.